Okay, today I'm going to tell you everything you need to memorize. Two things. Then I want you never to memorize anything again. Got it? Everything is common sense. You figure it out. This is analytics. You do not need to remember, right? Only two things. Mentioned one last time. Debit means left, and then it's intuitively obvious that credit means right. You don't memorize that. It's a waste of your memory. If you started doing these problems after you started reading the chapters and you are memorizing what the author did, you are doing yourself in. Okay? How many of you had accounting in high school? Raise your hand real high. That is an extreme disadvantage for most people. Because what you did, most likely, is you memorized everything. There's no way. And most likely you think accounting was real easy. That's because they didn't have you learn much of anything. I don't care if you did 4 years in high school. I'm not kidding. Anybody go to St. X and take accounting? Take accounting at St. X? Is Bergamini still there? Of course. Yeah, well, this class can be easy for you. It's not fair. Right? You probably already know that. Unless you got D's from it. You D's? No. Okay, anyway. And then there are a couple other people that do a decent job. Don't get it in the state of Kentucky. Right? A couple. So most of it's just an abject disaster. Okay? That's it. But it's high school. You're not supposed to learn anything. You're supposed to become high school. Right? It's all about socialization. K through 12. This is all about learning shit. I am not going to turn you into a better person than you already are. I hope you have an absolutely impeccable integrity, because if you don't, we'll try to drum you out of here. Right? I hope you have a good work ethic. I hope you treat each other well. I hope you're a good team type player. Right? If not, oh well. It's too late. You've heard the thing. Everybody's heard the thing. I knew everything I needed to know. Learned everything I needed to learn in kindergarten. It's true. My 5-year-old granddaughters are absolutely wonderful people because we have spent 5 years making them wonderful people. Right? My 7-year-old grandson, well, he's getting older, he's a guy, so he's turning into a guy. Yeah, so he doesn't do it at all. Anyway, so, all right. So anyway, the first thing you need to know is what, guys? Oh, everybody's read 3 chapters now, right? If you haven't, you might as well drop. Probably. Okay? When do we have the first quiz? Friday. Which week? Oh, this one. Yeah. So you're in trouble if you haven't read the first 3 chapters. You give me the hours I asked for? D, work 3 hours since that's all you'll ask, or 2 hours since that's all you'll ask. That's about a D. Right? Got it? Unless you already read all the chapters. You do that homework really fast. Okay? So lots of concentration, lots of thinking. I'm going to try not to waste your time here. Okay? I wish you learn as much as you possibly can with your time. Your time is extremely valuable. By the way, the tuition you're paying is nothing compared to your lost life that you're putting into your college education. It's not lost, really, of course, because you're utilizing it to build your skills, right? Okay, really, get a good education. Hopefully have a little bit of fun sometimes during the breaks. Right? Yeah. Okay, there's a holiday coming up, isn't there? When is it? Next Monday or something? Yeah, is that a holiday? Yes for me, no for you. What are you going to do? Study. Then there's going to be, what semester is this? What's the next holiday after that? Easter or spring break? Spring break? Do you have a break? No. Don't go to Florida unless you're an idiot. I promise you 1 grade reduction if you go to Florida. Can I go to Florida if I feel like it? No, I can't afford it because I went over Christmas for a week. So anyway, but otherwise I could. How come I can, you can't? I already know this shit. I'm old. I'm getting fairly close to retirement, right? And so I don't have to do other shit either. I'm just going to teach you guys. That's it. You got it? Okay, so I'm going to pound this into you, right? You're going to work. Or not. Up to you. Up to you. Everybody got it? Enough of that crap. We'll quit talking about that real soon because a whole bunch of you are going to leave. Like after the first test. I hope not, but you might. If you're sitting there and you're like, I don't have to work that hard, bullshit. This is just a class. We'll see you next semester. Okay? Summer of the following semester. Really. Even the kid from St. X. You might actually learn something this time. Okay, anyway. So, what's the synonym for left, everybody? I can't hear you. Synonym for left. David, this is first grade. Come on, it's first class. How come that went away? I had it. Did you guys see me right before with that? And it worked? Come on. Why would it go away? There it is. All right, here we go. Synonym for left is debit. We write DR. I have no idea why. Actually, it's from the Latin root. Okay? But debit. Okay? There's more in there. Okay, DR is debit. We always use DR for an abbreviation. It means left. What else does it mean? Absolutely nothing. Don't go there. If you think it does, you'll be in real trouble. You won't be able to do this because you'll be trying to do 2 debits or you'll be trying to do 2 credits, and that's impossible because debits must what? Equal credits. You ever hear about balancing the books? You ever hear that term? Of course. All it means is you make the left side equal the right side. Boy, that's high-tech stuff, huh? The reason I went into this profession is because it's so easy and most people can't do it. What a gold mine that is, huh? Don't have to work very hard, don't have to think very much. Well, you do work a lot of hours. But you don't have to think very much. It's pretty straightforward. It's all common sense. I can't remember anything, so it's perfect for me. Right? Okay? So, I don't know about you guys. This is credit. At least there's an R in credit. Okay? Left, right. That's it. If you know debit means left, memorize it. It's obvious credit means right. Or you can memorize the other one. I could care less. Okay? You can memorize credit means right. If it's obvious debit means left. Keep that, keep that, keep that. What's going to happen is a whole bunch of you, about half, are not going to buy into this. And your first test is going to be an abject disaster. Even if you work hard, it'll still be an abject disaster because you'll be trying to remember. Okay, let's go through the types of accounts here. You read about this, right? There are 5 types of accounts, right? There are 5. And I know in the first couple of chapters they only show you 3. We're going to do the whole model at once. That's why I had to read 1, 2, and 3, all of them. Okay, there are 5 types of things we're going to keep track of. 5, you guys, that's it. That's all there is ever, is 5 types of things. That's it. And once you know how to handle those 5 things, you can do anything, right? Okay, so what are they? What goes on a balance sheet? What do you got?
Show you both numbers.
No, just first one.
Assets.
Okay, where do you want to put the assets? Left or right side? Left. This is critical, because if you know, so here's the second thing you memorize. Assets go on the left. Therefore, assets must be what? Look at that right there. What does left mean? Debit. So guess what assets normal balance is? Debit. Do you have to memorize that? Of course not, because you know debit means left, and you know assets are on the left, because you memorize those 2 things. What's your name back there? What is it?
Maddie.
Maddie. You got to talk louder, Maddie. I'm deaf. No, you got to talk louder because you have a nice, sweet, wonderful voice, right? And when you're with your friends and stuff, please, I bet you're noisy with your friends anyway. Please be who you are. When you're in a business setting like this, what should you do? Project, so everybody will notice you. What was it again?
Maddie.
Maddie. Are you Madison, really?
Madeline.
You're Madeline. Oh, well, my granddaughter's Madison, so now I like you better than everybody else already because you're Maddie. Okay, anyway. And I have a niece named Madeline, too. She's a wild woman. Yeah, anyway, she's fun. She's in college, too. Okay, anyway. Why is that your name? We did this before, right? Why is that her name, you guys? Because it is. She's named that. Do you know her? Could you have guessed that name? Oh, man, that'd be tough. You'd go on a long time. Okay, so don't guess this stuff. Don't sit there. You guys are going to be in my office or in here and you sit there. I can't remember. I said, what the hell are you doing? I don't even know who the hell you are. I can't remember your name. I'm lucky if I can remember mine. But I can do this. Why? It's common sense. I can remember 2 things. Debit means left and assets are on the left. Got it made. Okay, and we use an A for an abbreviation for assets. Isn't that clever? Accounting is so complex, right? We make everything complex. No, we don't. Business is complex anyway. Accounting's easy. But the assets on the left. So this is going to be called a balance sheet. You know why it's going to be called a balance sheet? The assets are on the left, and then what do we put on the right? Liabilities. A or L for that, that's pretty good. Okay, and then what else? Equity or capital, right? Ownership interest, okay? So this equity. This is a balance sheet. That's because the assets equal the liabilities plus equity. Okay, the assets are on the left, so the normal balance is debit. Guess what the normal balance is for both liabilities and equity? Gotta be, you guys? Credit. Why? Because it's on the right. Do I have to remember that? Of course not. Why would I have to remember that? Okay, and once you know what these assets, liabilities, and equity are, then it's common sense where they go here on the balance sheet. Okay? All you have to remember is assets on the left. Otherwise, you'd be flipping. Huh? Okay, all right, here we go. What are assets? Somebody tell me what an asset is. Yeah.
Things you don't have to pay back, they're like yours.
Things that are yours. I like that. Possessions. You don't have to release them. They're yours. Yeah. I'd have to still pay for them. You're a liability. Right? Assets are all your possessions. Are they things you own? Not necessarily. My wife wants to buy a new car. 40 grand for a nice car. It's ridiculous. Anyway, so there's no inflation, right? 10 years ago, she got a really nice one, a Volvo, for 30,000. Now it's 40,000 for exactly the same car. There's been no inflation in the last 10 years. Right? Really? Yeah, right, sure. There's been a lot of inflation. Just wages have gone up. Right? But anyway. So, I think we have some. So anyway, she's going to go in and she's going to get a car for 40 grand. You know how much money we're going to give them? None. If we have really good credit. We won't give them anything. Yeah, it's kind of funny. So, what's your down payment? You say nothing. And we want a really good interest rate, too. And then they give it. Right? That's because there's money in our retirement account that will easily pay for 40,000, right? So, no interest. Okay? So here's the deal. How much of the car will we own? None of it. It'll be worth less than what we owe on it when we drive it off the lot, huh? That $40,000 car will now be worth $32,000 or something, right? You know what happens, right? She loves new cars. She's not stupid. It's stupid to love them. Okay, anyway. But she's really cute, right? She can have whatever she wants. She can have new cars, even if it's a waste of money. Okay, anyway, so here we go. She's kind of sweet, too, and she does everything. I do nothing but this. So anyway, the asset, if we got a $40,000 car, is the car. Huh? Give me some examples of other kinds of assets. Oh, man. How many are there in the world? Let's see. Here's one. Look. Here's one. Beautiful Christmas card. Here's one. Pen. Here's one. For scarf. Here's one for cap. Here's one, this table. Here's one, this table. Here's one, this table. Here's one, this book bag. Here's one, this book. Here's one, this screen. Here's one, that door. Here's one, this cover on the light. Everybody got it? How many are there in the world? Billions. If you know how to account for assets, you know how to account for all those. If they're our possession, right? By the way, this book is my possession. That cap is her possession. That scarf is her possession. You got it, guys? So this is my asset. Those are not. Those are their assets. That's it. Really simple. How many assets are there in the world? Billions. Do you want to memorize how to account for billions of different things? What for? No wonder people can't do this, huh? So what do? If we identify something as an asset, we know how to account for it. That's all there is to it. Okay? And we are going to put it on which side because assets are on the left. Where are we going to put the entry to record the transaction? Transactions just exchanging things. Transacting business. We're going to put it on the left. That's it. Okay? All right. So I've got 40,000 of assets. What else would I have, though? Oh, I'd have a liability of $40,000 because I own none of it. What are liabilities? Assets are all your possessions, whether you own them or not, because you might not have paid for them yet, right? Okay, that car my wife and I won't have paid for, it's not really our asset, right? It belongs to the bank. If we get to use it, though, it's our possession. Got the idea? If you have a house and it's a $200,000 house and you own 50,000 of it, right? How much does the bank own? 150. You have a liability of 150, right? So what's your liabilities? Anything you owe anyone. How many people in the world? I don't know. Anybody know? Over 7 billion. Oh, I guess I could owe 7 billion people money. I feel like I do sometimes. And then all the companies too. And then there are a variety of ways to owe them money. Mortgages payable, rent payable, salaries payable. Get the idea here? Notes payable of various kinds. Guess what all of them are? If you owe somebody something, you are going to pay for something later, what's the deal? It's a liability. Big deal, right? It's a liability. The liabilities are on the right. Guess how you're going to increase it because you want the normal balance to be A? They're on the right. What does right mean? Credit. Got it. Okay? That's it. Okay? So how many liabilities in the world? Billions. Just like the assets. Do you want to memorize them? You get the point here, right? It drives you crazy. Okay? Now guess what? In this case, I have no wealth there. Equity is a representation of my wealth. That's something new to you, right? It's a representation of my wealth. Equity or capital. If you had accounting in high school, they might have called it capital. Same thing. Okay? Equity and capital is a representation of my wealth. That's all it is. There's only going to be a few different types of equity as we go along. Okay? Not very many of them. There aren't billions, okay? There's only a few, just a handful that we're going to have to get used to. All right, but obviously if I have 40 assets and the assets have to equal the liabilities plus the equity, and there's 40 liabilities, guess what? There's no equity. But let's do the example of the house instead. It's a $200,000 house. Not a very fancy house. Luckily, that's about what our house is worth. It's nice. Although we own almost none of that, too. 65 years old and I don't own my house. It's terrible. You know why I don't own my house? Because the interest rate on the house is 3%. And every year I earn 12% in stock. How much stock do I want to sell to pay off that house? Let's see, it's costing me 3. I'm earning 12 with the money that I could pay off the house with. How anxious am I to pay off that house? I'm never going to pay off that house. As long as you keep loaning me money at 3% against it, what am I going to do? Borrow until I die. My grandkids will be richer. It's all right. Thank you, bank. Knowing how to handle money is really, really important to you guys. By the way, the house is worth a couple $100,000. We could take 170 for it, or it's probably worth 200. We could sell it and do what? Pay it off. So if I did die, what would we do? I'm old. I got to think about those things. Not really. I don't care. Well, I care if I die or not. I don't dwell on it much. What do you think? Does it really make any difference if I have it paid off before I die? Not the least. Right? So welcome to the business world, right? That's okay, as long as what? What I'm earning off of those assets, right, exceeds what those liabilities cost me. What do you think? How much money are you willing to borrow at 3% if you can invest it at 12? How about all the money in the world? What's the problem if you try to borrow all the money in the world? Your interest rate won't be 3%. And you also won't make 12. And that's the game, right? You balance how much you borrowed and how, because that's more risk. You know, the more money you owe people, the more risky you are. That make sense? Okay. By the way, we go get a credit card today. I'm going to go get a credit. Do you have a credit card? No. Okay. Let's go get a credit card today. Some bank, any bank. Let's pick a bank. Let's go down together and get a credit card. What's your interest rate going to be, and what's my interest rate going to be?
Probably higher than yours.
How much do you think yours might be? If they give you one without your parents co-signing, and I'm sure not going to. Right? Without your parents co-signing, right? So that's their credit, not yours. 24. If you get 24%. What's mine going to be? 4 or 5. What? You're in this category with all these deadbeats, particularly being a male, right? How old are you? 20-year-old male. Be worse if you're 19. Getting better every year, right? Unless, what? Do you have 100,000 in the bank? Do you have anything in the bank?
Yeah.
How much?
$2,000.
$2,000. Actually, your rate will be a little lower because of that. Because she probably owes $5,000 on credit cards. She has nothing in the bank, right? The whole time. Right? That's a disaster. Okay? You see what I mean? How risky are we? What? Is he less apt to pay than me? I doubt it. What's the bank going to think? He's in a category where they are, and I'm not in the category anymore. I have my own personal wealth. Not a lot, but enough, right, for a credit card. Right? So they think they have no risk. They'd be thrilled. Okay? All right. Anyway, why would he pay 5%? Much less 24. Okay, so what did I say? We had a $50,000 equity. What does that mean? I own 50,000 of it. How much would I owe then? 150. Does it make sense to you guys that of course your assets equal your liabilities plus equity? Because all of your assets, all of your possessions, either you own them or you don't, or you're still paying for them, right? You own part of them. Make sense? So of course your assets have to equal your liabilities plus your equity. This is common sense. Got it? Okay. Nothing to this. Now that's all a balance sheet, right guys? It's not really a balance sheet. It is a statement of financial position. It's where you're at right now. But we insist on calling it a balance sheet, so we do, right? Called it a balance sheet for a couple hundred years. So fine, it's a balance sheet. It's really a statement of financial position, where you're at right now. What assets I have, all my possessions, right? All the company's possessions, or an individual's possessions, doesn't matter. Okay, all my liabilities and all my wealth, my equity. Everybody got it? It's simple, okay? If you get this down, next time I see you, you are going to know this stuff inside and out, and we will have it made. And this is going to be an easy class for you. Still lots of hours of work, but it's going to be easy. If you don't have this down next time I see you, you're going to wipe out on the first quiz. It's Friday. Next time I see you is going to be Wednesday. We are going to go over that quiz that's online, which is what this is, guys. It really is. This is the quiz that's online. You're not going to recognize it. That's because you don't know how to use this yet. I'm giving you the model here. But how good are you going to be at using the model by Friday? Probably not very good, unless you really pound on it. And if you've been pounding on it already, some of you guys are sitting there thinking, well, that's kind of intuitively obvious. I read the 3 chapters, and I studied them, and I already knew what he was talking about. Right? Others are sitting there and you haven't read a word yet, and you're lost. And I hope you're feeling panicked because I want you to. Because if you were new employees, the ones who are feeling panicked would be the ones I'm getting rid of after a month. And I'm not kidding. Okay? Now, I don't mean to say everybody gets fired every month. What happens? Everybody gets prepared, learns their job, goes for it, right? This is a competitive environment. You guys want to make $200,000 a year, or even $100,000? Do you want to make 50 instead of 25 when you graduate? Yes? You're going to be expected to do about 10 times as much work for 50 as 25. I'm sorry. I don't need 10 times the hours. I need 10 times the output. You're delivering, right? When I give you something to do, if I'm your boss, I forget about it, and then you tell me it's done. Wow, I love that. Do most people do that? No. They have to be managed. Horrible. I like people that can manage. You know, I got 10 people on my team, and I manage them by asking them to do things, and then they go do it, and they come back and tell me they did it, and it's better than I would have done. That's management. I love hiring people who are smarter than me and work harder than me and get more done than me. Wow, my hero. If I pull that one up, huh? I'm one hell of a man. With me doing nothing. It's good. That's who you want to be, huh? You haven't thought about that, but it's who you want to be. And those of you who have, all of the parents, but if you have parents that are kind of obnoxious like my dad was, like I probably was with my kids, tried not to be. But they kind of expect that, don't they? You deliver, right? You deliver. Okay? It's who you are. Okay, so anyway, let's add these other 2 accounts that go on something called cleverly an income statement. You know why we call it an income statement? Because it's where we keep track of how much income we have, right? And income is the difference between 2 things. These 2 terms might be new to you, but you already know what this stuff is. What's the first one that goes on the top of the income statement? Revenues. And then following that, expenses. And these are really easy to define, you guys. Okay? And the difference, this is not going to be an account. This is not something we keep track of. An account is simply a place where we keep track of things. We keep track of our assets, which means debits and credits. Liabilities, which means debits and credits. Equity, which means debits and credits. Okay? We're also going to keep track of our revenues and expenses. And later we'll have gains and losses when we come up with this. Okay? But anyway, those are all the accounts. There's only those 5. That's it. If you know those 5, you got to make. Got it? You want to know those 5 next time I see you, if you don't already. The difference is net income or net loss. Okay, so let's get to that. And that's simply revenues less expenses. Okay? Now, what are revenues? Sources of income, yes.
The total amount of money that you made without, like, any of the costs.
With none of the costs. Oh, so he went to costs. I like that. He went to costs. Costs are the expenses. Expenses are costs. Everybody got it? That's all it is. An expense is a cost. By the way, this isn't accounting. This is business. A bunch of you guys are business majors, and I get it all the time. I already got it from a couple of you. Well, I'm not going to be an accountant, so, I just need to do this class, and I don't need to really know this stuff very well. You don't need to know what the costs of a business are. You're going to work a business. Are you kidding me? You don't need to know what the sources of revenue are, which is, what? Sales, rental income, all the ways that you enhance your wealth by earning. Huh? Got it? My wife's really glad that I'm here today doing this. Because guess what? That's where the revenues are coming from that are going to pay for her new car. And our rent, and, well, house payment, all the stuff. Beer, wine, bourbon, stuff I like. Okay? Right? You got to generate revenues. You don't do anything, huh? You got to generate revenues. So what are revenues? All your sales, all your income from various sources, right? Revenues. Okay? All right. And what do revenues tend to do to your wealth? Your wealth is the equity, right, guys? What do revenues do to your wealth? If I earn more, what happens to my wealth? It goes up. Got it? We're going to use that. That's common sense. Okay, these expenses, the gentleman said, are cost, huh? Those are all the costs you incurred to get what? Why would anybody incur costs in a business? To make more revenues, right? You guys go to Kroger. Does Kroger really want to have milk? Does Kroger want milk and all the other groceries in their store? Absolutely not. They do not want that stuff. By the way, they're going to call that inventory, and it is going to be an asset because it's their possession. And the reason they bought that asset is to get you to come in and what? Buy it and give them your money, right? And you're going to hopefully buy it for more than they paid for it, right? That's sort of the idea, okay? And when you buy it, that's going to be a sale to you that is going to be revenues. And what's going to happen to that milk? It's inventory that is going to cease to be an asset, and they're going to give it to you, and you're going to walk away, and what's it going to become? And it's going to be a reduction of equity through expense. So, you give them $4 for, what does a gallon of milk cost? I don't know. You give them $4 for a gallon of milk, is that bad? Probably. $4 for a gallon of milk. I told you I don't go to stores. Every once in a while I go to a store to prove to my wife that I love her. And I follow her around, and I'm not supposed to buy anything or pick anything up or nothing. And then I haul the groceries to the car. My job is to eat. She does all that. I'm not kidding. She does that. Okay, anyway, so $4 here, and what if it costs the store $2? $3, better make it 3. Okay, so 4 and 3, how much would we make? 1. It's common sense, isn't it? Okay? But we're going to learn how to account for that. Anyway, does Kroger want to have milk? No, they want your cash. Got it? Do they want to have employees? No, they want your cash. I'm going to sell things to you. Do they want their building? No, they want your cash. Does UPS want to own all those pretty trucks and all those pretty airplanes? Not very pretty. Do they want to own them? No. They want your cash. Right, guys? What are we doing here? They're trying to enhance their shareholders' wealth, right? We always say enhance. Make it bigger. Right? That's enhancing. That's what it's about. Okay? Doesn't mean they don't want to do good things in the community, right? And they don't want to employ people, and they don't love their employees, and all that, right? Love their community. Well, what are they doing? They're generating more revenues and expenses so they can do all the things they do, including enhancing shareholder wealth, okay? It's not all about making money, really, of course. All right. Anyway, so to the extent, as you're increasing your revenues, that's making your wealth larger. What happens if you increase your expenses? It's making your wealth lower, of course, okay? And then to the extent you have net income, you have more wealth. Everybody agree? If you didn't have net income, well, by the way, net income is revenues being bigger than expenses, don't you think? Your sales are bigger than your costs, of course, okay? If I bought the milk for $5 and I sold it for $4, I'd lose $1, wouldn't I? Of course, okay? That's simple. Do some companies make money and other companies lose money? Yes. Some years you make money, some years you lose money? Yes. Okay? So we're going to be able to tell what's going on. By the way, remember last time I told you, we're not going to really do this, writing everything down. People actually used to do that. They were called clerks and bookkeepers, and they made minimum wage, basically. Right? Maybe a little bit more. Horrible jobs. Horrible jobs. Those are gone. Who does those jobs? Computers. All that's left is accounting now. Okay? Pretty much. Okay? So there are some bookkeepers around still for real tiny companies. Okay? But mostly it's all computerized, of course. Okay? All right, why wouldn't they? So people have to learn how to do different jobs. Here we sit, huh? Okay, anyway. So let's think about debits and credits in terms of this stuff. Oh, what would it be, I'm sorry, if expenses exceed revenues? Your costs are higher than your sales. Come on, you guys, what do you have? Net loss. That's it. So you either have a net income or a net loss. And what's kind of cool is one's going to be a debit and one's going to be a credit. We use debits and credits for everything. We don't have to remember stuff. We can use debits and credits. Okay, so here we go. See if I can actually pull this off. Erase those guys. All right. So let's use debits and credits for this. What do we say assets have to be because they're on the left? This is over here on the left. So they must be debits. So the normal balance is a debit, and how would you get them to be a debit? If your normal balance is going to be a debit, you will increase it with a debit. I don't have that memorized. Debit means left. Assets are on the left. I want the assets to be debits, their normal balance, so therefore what? I increase them with debits. Now here's what hangs people up a lot. Sometimes they'll get this idea down that assets are debits, but then they think they can't credit one. No. You debit them when you receive the asset, but what if you give up the asset? Now, Kroger bought the milk. It's now inventory. They would debit inventory, that asset, increasing it. What do they do when they give it to the customer? They don't have it anymore. What do they need to do? Take it out of the asset with a credit. You got it. So we'll reduce assets with credits. Okay? And that allows us to have a normal balance of debit in the assets, all of them. Billions of different assets in the world, all are handled the same way. If I receive an asset, what do? If I increase my assets, I debit it. What if I reduce my assets? Give one up. Credit it, all of them. That's all it is. This is so simple. Okay, and then over here on the other side, both of these are on which side, you guys? Right? So guess what the normal balance is? Credit. So how do you increase them? Both of them. With a credit. Okay. How do you reduce them? Debt. No kidding? Really? That's it. And that'll make sure your debits always equal your credits. And by the way, anytime you record a transaction, you make sure your debits equal your credits. And then on a balance sheet, they always will equal each other. Okay? That's it. Okay? Simple little model. Simple little model. All right. What do you think revenues are, debits or credits? What do revenues do to your wealth, your equity? Increase it. How do you increase your equity? With a credit. Therefore, revenues, they're sort of temporary equity accounts. I keep track of it for 1 year in my income statement, and then I'm going to put them into the equity section directly. I'm going to physically do that. Okay, I'll make a journal entry to do that. Journal entry is just writing down debits and credits. Debits equal credits. Recording a transaction. Business activity. Okay? So at the end of each year, I'm going to take my revenues and expenses and make them zero. Right? And by doing that, I am going to increase my equity by the amount of the net income, or reduce it by the amount of loss. And I do it once a year. Got the idea? Okay, so they're temporary equity accounts. Got the idea? Temporary or nominal, we call it. Okay? So there's a little bit to get your head around here. Once you see this model, though, this is piece of cake, guys. Okay? All right, I'm not saying business doesn't get complex. It gets very complex. Accounting does not. The hard thing is figuring out what the business transaction was. Why do so many accountants and former accountants, well, I guess they're former by the time they're running companies, why are so many accountants and finance types ending up being CEOs? Because they know where the money came from and where it went. That's it. You can read financial statements. They know. So if you are going to be a marketing person, how are you going to get to be a CEO? Understand marketing extremely well, and oh, by the way, understand accounting and finance. Oh, I should say this, if you're an accountant, how are you going to get to be a CEO, Chief Executive Officer? Understand marketing, too. And human resources, and production, and distribution. You have somebody running a company, would you like them to understand every aspect of the company or what? You ever want to get there? What are you going to have to do? Anybody in here want to have their own business someday? Want to run their own business? Any entrepreneurs in here, maybe? Yeah. Think it's important to know all this stuff? Oh, man. You go bankrupt fast. If you don't know this. But you know what? If you can't sell anything, you'll go bankrupt fast, too. Right? You can't do an ad campaign, you'll go bankrupt fast. If you can't manage your employees, human resources, right? Don't know who to hire and who to fire and when. You follow all the laws, and yeah, it's over. Small business, right? What about a big business? So you get the idea here, you guys? You want to know all this stuff. You're not training for one little tiny piece unless you always want to be a flunky. If you want to never make any money, never have any power, right? Never have any prestige if you care about all that nonsense, right? Never have any fun because you're doing the same thing over and over and over. Then just work on your one thing, right? Otherwise, know everything. Everything about everything. Okay? That's what you want. All right. Anyway, so what do you think revenues have to be then? We said what? Credit. So if I increase them with a credit, how would I reduce them? With a debit. Okay? So if you put too much in, you'd use a debit. Okay? That makes sense? Increase it with a credit. How would you increase expenses? Debit, because they have to be the opposite. And also, what are they doing? They have to be the opposite of revenues. What are they doing? They are reducing your wealth. How do you reduce wealth? With the debit. So therefore, as I increase the expenses, I am reducing my equity. That sort of plays the game in your head, doesn't it? Right? As I increase the expense, I'm reducing my equity. So increasing expenses with debits is reducing my equity. Got it? Arrow switch directions there. If I put too much in, what would I do to fix it? Reduce it with a credit. That's all there is to it. So expenses will have a net debit in it, right? Of course, it'll be debit. revenues will be a net credit. They'll be a credit. That's it. Okay? So I add up all my revenues, get a total, it's a credit. Add up all my expenses, get a total, it's a debit. Right, guys? And my net income is if it's positive net income, what would I have? A credit. But that's not a journal entry, right? It's just the difference. And I don't have to remember what to add and subtract. What for? It's the difference between debits and credits. Got it? Always. Okay, a net loss would mean what? It's a debit because the expenses, which are debits, exceed the revenues, which are credits. And I lost money, of course. Got it? This is simple. Okay? All right. So, let's do something a little different with this, Jeff. Let's do something a little different. I'd like you to tell me, using exactly the same thing, maybe what we'll do is we'll put another sheet up here. That's pretty good. View dual page display. There we go. All right. Let's do the same thing, and let's talk about good and bad. Okay? So I've got good and bad and plus and minus. I want to break you of doing good and bad and plus and minus right away, because you really want to get rid of that. And you know what? Most people come into this class, in the accounting class, and the first time, and they think, well, I already know. I already know that when I receive assets, that is a good thing. Right, guys? Is it good when you have more assets? I think so. Right? So therefore, seeing as assets are increased with debits, it must be that debit means good. See? That's perfectly logical to me, isn't it, you? Debit must mean good because debit increases assets. Everybody like that? Which then must mean that credit means bad, huh? Because reducing your assets with credits would be bad. Everybody agree with that? Let's see how well this works if you use good and bad. How do you increase liabilities? With credits, right? Which means, and increasing your liabilities is bad, huh? Would you guys agree? I don't want more liabilities, I want less. So that would be bad. Oh, this is working great, look at that. Bad, bad, credit can be bad. And then reducing my liabilities, what would you think about that if you got rid of all your liabilities? That'd be good, wouldn't it? So yeah, debit's good. Okay, here's where it's going to fall apart. How about equity, your wealth? I increase my wealth with credits, don't I? Do you think increasing wealth is good or bad? I think it's good, and all of a sudden credit means good, and you go insane. Because look here. Debit good, all of a sudden credit good. Don't go there. Don't use good and bad. What does debit mean? Left. What does credit mean? Right. Nothing else. Don't go there. Okay? How about this? I reduce liabilities with debits. Or equity, with debits. My wealth is going down. That is bad, isn't it? So obviously, that one's screwed up too. So these do not work, do they? And then, of course, revenues and expenses are going to be the same way. What does debit mean for a revenue? Reducing it? Bad. What does credit mean for an expense? Reducing it? Bad. Whoops. Reducing it? Good. Backwards. It just goes nuts. You can't do it. How about plus and minus? It's going to be the same thing, huh? Right? Think about plus and minus. How would that work? I hope this gets to you guys. Some of you who had accounting in high school, you kind of tried to use that. That's observed over the 35 years I've been teaching, I guess. A lot of times. It's really hard to break yourself up. So does debit mean plus? Sure it does. Credit means minus, right? For assets. How about liabilities and equity? No. Credit's plus. Debit's minus. Right? It's just not going to work. It's just not going to work. Don't go there. Okay? All right, guys. So let's... Okay, that works. Somehow that works. I don't know why I get this over here. All right. Let's think about some transactions. All kinds of things you could do in a business. Okay? Here's your first journal entry. Journal entry means, and do them this way, please. Please, please. I know, oh, by the way, is the author using debits and credits in chapter 1 and 2? No. They start using them a little bit in chapter 3. Yeah. They don't tell you what they are really until chapter 3, do they?
They mentioned it in chapter 2.
Mention it in 2 and then really start using them in 3. Yeah. It's kind of crazy, isn't it? They should start at the beginning, I think. That's why I do this, right? You need to see the whole thing before you start doing it, or there's a tendency to do what? Yeah. And then they're always showing plus and minus next to the accounts. Don't do that. Why would you put plus and minus next to it? You know what you did. I'm going to know what you did too. Because we always put the debits on the what? Left. We put both the name and the number to the left. Got it? And we know it's a debit. You don't have to write debit next to it or plus or minus next to it. I know it's plus or minus based on the account the type of account it is. So do you. That's why you did the debit. Right? Same with credits. Credits are going to be what? Both the account name and the dollar amount to the right. That's it. You don't have to put all that plus minus nonsense. Okay, you don't have to write down the asset, liability, equity. We know what they are. Revenue or expense, right? We know, or we could have done the transaction, so nobody does that. Okay? So let's do our first transaction. Let's start our business by investing, right? $100,000 of cash in the business. Okay, all you do is you ask yourself, now this transaction is no different than any other one. You just figure out what. What did we get and what did we give up? What did we get if we're the business? $100,000 of cash. What did we give up? Oh, ownership, right? It's going to be contributed capital. It's going to be ownership, right? Equity went up by 100. The owners just contributed. We don't owe it to them, right? It's their contribution to the business. It's contributed capital. Okay? Contributed capital. So here we go. I received cash, which is a what? Everything. Everything that's out there is either an asset, a liability, an equity, or a revenue, or an expense. Got it? Everything is one of those things. So what is this? Cash. It's an asset. Do I have more or less? More. That's the second question. First, what did I get? Minus the third. First, what did I get? And then, what is that? Right? Cash, asset, 100,000. Okay? And then what? Assets are on the left, and I have more. So what do you want to do? How do you increase assets? All of them. Debit. So debit cash. That's it. Are you kidding me? Yeah, that's it. Debit it. I put it on the left. What do I want to put on the right? And you know the left side has to equal the right side, right? The debits have to equal the credits to stay in balance. And of course it's true. In any transaction, you got something, you gave up something. This isn't man-made. This is real, right? How many of you, when you bought that Gatorade bottle, did they expect you to pay for it? Or did they just give it? Well, they might have given it to you. It might be a promo. But anyway, yeah. That. What is that? Perfect something. Water or something. Okay, she bought that bottle of water. I bet they made you pay for it. Yeah. Okay, they didn't just give it to you. Right? And you wouldn't give them your money if they didn't give you the water, would you? Yeah, I mean, there's an exchange going on here. There's always that way, right? Okay, I know sometimes your parents give you money, but you owe them, don't you? Right? There's a price to be paid for that. They're paying your tuition. The only time you get something for nothing is when your grandparents give it to you. Right? Well, they have to give you a hug. That's about it, right? Just for a hug or something. That'll do. Right? You can have anything you want. Right? My kids can have nothing. Just like when they were little. Earn it yourself. Okay, anyway. So what's the deal here? Contributed capital. And really this is going to be common stock later, but for now we'll call it contributed capital. And you know what? I put it to the right. See the name is to the right? What does that make it? Credit. I put the number to the right. What does it make it? Credit. And we'll use columns, The column on the left, column on the right. The column on the left is the debits. The column on the right is the credits. Big deal. Okay? And notice I didn't label anything debit or credit or asset, liability, equity, or anything. Do you guys know cash is an asset, a possession? Of course you do. Do you know contributed capital is equity? Sure you do. Okay? So we all do. It's okay. It's just like. All right, now let's go to the bank and let's tell the bank that we put in 100,000 of our own and we'd like to borrow 50,000. What will the bank say? Probably okay. Right? You got 100,000 cash. You put in 100, right? We'll put in 50. Okay? Probably will. And they're going to charge you interest, of course, right? But they give you 50,000, also cash. What do we get? Cash, which is a asset. Do I have more or less? No. They gave you. The bank gave you 50 cash. I have more, right? So what do I want to do to cash? It is a what kind of account? asset, and I have more, so I'm going to do what? Debit, that's it. Debit cash. So now, how much cash do I have now? If I did a cash account, these T's represent accounts. We don't really have T's out in the computer. We have positive and negative charges, right? No, what we do. But what we do is we keep track of the debits and credits, right? Add up the debits, add up the credits, and take the difference between them in the computer, okay? But this just represents the cash account, any account. So the stuff right on the left are going to be what? Debits or credits? Debits. This is the debit side. Stuff I put on the right are going to be what? Credits. Okay? Everybody got the idea? I can have a net debit when I add up all the debits and subtract all the credits. Or you could do the other way around. You could add up the credits and subtract the debits. I don't care. And you take the difference between them. You got the idea? We keep this real organized this way. And of course you're using computers to do this. The computer doesn't care. Does the computer care if we do it a million times? Not in the least. If you're doing it by hand, it's kind of annoying to do it a million times. You got the idea? Okay. All right. So this is a debit, 50 to cash. What do you want to credit? Oh, what did the bank make us do? They gave us 50,000. I bet they had us do what? Sign a piece of paper called a note, right? A note, piece of paper. We signed it. It's got terms, when it's due, who we owe it to, that we do owe it. We sign our signature, they sign theirs. Says how much interest, what the payments are going to be. What is that thing? Note what? Payable. And anything that's a payable is payable to somebody. It is a what? Liability. And do I have more or less liability if I borrow money? More. And how do you increase liabilities? All of them. They're on the right, so they're increased with a credit. See how easy this is, you guys? And I know your heads are kind of swimming, right from the beginning. Just keep thinking about it and thinking about it. Think through it instead of trying to remember it. Got the idea? Okay, and it'll be easy. What's going to be hard is determining what you exchange sometimes. Imagine when Exxon buys another oil company. Exxon bought Texaco, I think, right? Ooh, somebody get a shell, maybe. Okay, when they bought billion-dollar companies, do you think there might have been a few things exchanged? Wow. They had to make one big monster journal entry for it. So you probably need to talk about this stuff like that. The debits had to equal the credits. They had to figure out what they got and what they gave up. And what do you bet the Texaco shareholders wanted a lot for Texaco? Right? Okay, cash and stock and stuff. Okay? You can account for anything, you guys. Account for it is just writing down the debits. Okay? Counting. And by the way, anything we put into a journal entry like that shows up in the financial statements. So when you look at Apple's financial statement at the end of the year, you see every single thing they sold in revenues, all added up. You see all the costs of all those things they sold and all their other costs in expenses. And we get it all to fit on one page called an income statement. Wow. And all the things Apple, let's do a better example, General Motors, because Apple doesn't have very many assets. General Motors. Imagine how many assets General Motors, or GE, even bigger. GE, how many assets does GE have? How many liabilities does GE have? How much equity does GE have? All fits on one page. Got the idea? Billions of transactions can fit on one page. We just add them up with all these debits and credits. Make sense? Okay, you guys have to quit trying to leave on time. It just drives me crazy. I'm not quite done yet. One more thing. By the way, if you have a class after this one, head for the door. If you don't, listen. Okay? Anyway, so here's the deal. Cash came in. Let's say I just started the company. What's the beginning balance in every account when I start the company? Zero, of course. So, by the way, do the debits equal the credits? Does zero equal zero? Of course it does. So you keep it that way by making sure your debits equal the credits, huh? Okay, so here we go. Let's record these. Cash, 100,000 comes in here. Everybody see that? Okay? Contributed capital, 100,000 comes in here. Are we in balance? Yes. We have a balance sheet now. Cash on this side, contributed capital on that side. Then what happens? 50 more cash comes in. Now on my balance sheet I show 150 in cash. Got the idea? Okay? And I would have a liability named notes payable with 50,000. Now how many accounts can you have? As many as you want. Thousands in a big company. Got the idea? Maybe 100 in small companies. Okay? Whatever. All right? Whatever you want to have. By the way, let's do one more. One more. What if we now take $20,000 of that cash and we buy a truck? What would you do? What did we get? an asset named truck, right, or equipment or something. So what would you want to do? I have more of it. What do you want to do? Debit it. Debit trucks or delivery equipment or whatever you want to call it. Okay? Very flexible. Equipment, 20,000. What do we give them for it? Cash, which is an asset. Do I have more or less of that asset now? Less. So what do I do to it? Credit it. Okay? And then what happens? Now I have another asset named trucks with 20 in it, right, everybody? But I no longer have 20 of the cash, so how much cash do I have? 130. Well, you know what? I have assets of 130 plus 20, or 150. I have liabilities of 50, and I have equity of 100. Is 100 plus 50 equal to 150? Of course it is. Got it, you guys? Do a bunch of problems. Do a bunch of problems. And don't do all that plus, minus, right asset, liability next to it. Instead, show them to me as debit, credit, debit for yourself. As debit, credit, debit, credit, debit, credit. Okay? Work through a bunch of those problems. They'll be kind of easy if you let yourself think of it this way, okay? Anybody who is nervous about this class, don't be. Just work hard. Never be nervous, work hard. Right? You're worrying, you can't sleep at night about your classes, get out your books, you'll fall asleep for the class. And you'll be more prepared, too.